If you're relying 100% on a standard S&P 500 index fund because Wall Street told you it's the only safe bet, you might actually be leaving a massive amount of growth on the table. Hey everyone, welcome back. For those of you who are new here, I pulled the fire trigger, meaning I retired early at age 30. It's been almost 3 years now. I make a living entirely off US stocks, live a minimalist lifestyle, use legal tax hacks, and travel the world while keeping Los Angeles as my home base. So far this year, my stock portfolio is up over 31%. That's almost double the performance of the S&P 500 index. Now, this video isn't about flexing numbers. Running on zero W-2 income means my survival depends on how I manage my money. Today, I'm going to lay out the exact strategy I use to beat the market, why I completely dumped Robinhood for Chase, and how I legally pay 0% in federal capital gains taxes on my stock income. Let's dive in. Back in April, I spent 2 months traveling across Eastern Europe, visiting 10 incredible countries. It was an amazing experience. But before I get into the travel details, I want to explain the exact financial setup that allowed me to take a 2-month trip like that without having a job, starting with my mid-year stock gains. When people dream about early retirement, they usually hyper-focus on a single net worth number, like $2 million or $3 million. But here's the reality. Once you quit your day job, even if you have a solid net worth, losing that steady bi-weekly paycheck creates a massive psychological hurdle. The S&P 500 has averaged around 10% annually over the last 100 years and roughly 13% over the past decade. It's a great baseline. But retiring in my 30s meant I needed a two-pronged strategy: aggressive capital growth to fight decades of future inflation, and a bulletproof cash flow system to fund my day-to-day life without panicking during market dips. To set up that cash flow system, I had to fix my banking setup. I used to use Robinhood as my primary brokerage. Now, Robinhood Gold pays a solid 3% to 5% interest on uninvested cash for a $5 monthly fee. That sounds great. But when stock sales are your only source of income, Robinhood has a major downside: withdrawal speed. Moving cash from Robinhood back to my main checking account took 3 to 5 business days. When you need immediate liquidity while traveling or covering an unexpected expense, waiting nearly a week is a pain. Since Chase is my primary bank, I decided to move my entire portfolio over to Chase Brokerage. That way, my checking, credit cards, and investments live in one single app. Now you might think, doesn't Chase pay 0 interest on uninvested cash in a brokerage account? One of the biggest reasons I don't day trade or check my stocks every morning comes down to one thing: taxes. Under US tax law, if you hold an asset for more than a year before selling, it qualifies as a long-term capital gain. Here's where it gets interesting. If you have 0 traditional W-2 income, and your only income comes from long-term capital gains, the federal tax rate is 0% up to a certain income threshold, around $47,000 for single filers, or even higher when combining standard deductions. What about state taxes? I live in California, which is notorious for high taxes, but for long-term gains up to around $300,000, your effective state tax rate stays under 10%. For example, last year I realized around $60,000 in capital gains. Why specifically $60,000? Because based on current tax brackets and state deductions, that number sits right in the sweet spot for keeping my tax liability as close to 0 as possible. My total tax bill ended up being less than $2,000. To get a $60,000 take-home income from a standard W-2 job, you'd likely need an $80,000 to $85,000 pre-tax salary. And here's the kicker: I didn't even spend all $60,000. Whatever cash was left over after covering my living expenses, I immediately reinvested back into stocks or rebalanced into SGOV to keep earning risk-free monthly interest. Now, you might think, is all this tax calculation and portfolio rebalancing too much work? Well, I don't work a 9 to 5 anymore, so I have plenty of time to spend on things that actually matter. Understanding the tax code lets you live on significantly less gross capital while constantly rotating your excess cash back into productive assets. Now, let's talk real numbers. From the beginning of this year to today, my stock portfolio is up over 31%, more than double the S&P 500's return. 1-year gain, 38%, 3-year cumulative gain, 40%. Since taking the leap into FIRE 3 years ago, my portfolio has far exceeded my expectations. So, what am I actually holding? I don't buy penny stocks, I don't chase speculative hype plays, and I don't use complex leveraged ETFs. My portfolio is strictly focused on one core pillar: mega cap big tech individual stocks. Out of all my holdings, my top performers so far this year have been Alphabet, Google, and AMD. Google's momentum in AI integration and AMD's surging data center demand have driven massive upside for my portfolio. So here's how my entire setup actually works. Core growth engine, strictly holding high conviction, mega cap big tech leaders like Google and AMD. Cash flow and liquidity, keeping my uninvested cash in SGOV so I can draw tax-efficient monthly income and transfer money to my checking account instantly when needed. That's literally it. No leveraged decay risks, no timing the market with penny stocks, just owning the most profitable tech giants in the world and keeping my cash yield high and liquid. Even when the Nasdaq experiences pullbacks, I don't panic sell because I'm convinced of the long-term trajectory of mega cap tech. I want to be completely honest with you. Did I get lucky over the last 3 years? Absolutely. Will I be able to beat the S&P 500 by double every single year? Highly unlikely. There will be down years where I won't be able to harvest gains at all. But by holding high conviction assets through market cycles rather than panic selling, the bull years help absorb the bear years. At the end of the day, beating the market doesn't mean anything if you're glued to a chart 10 hours a day stressing out. The real goal of FIRE isn't just accumulating wealth, it's buying back control over your time. Keep your strategy simple. Optimize your taxes, build a routine that supports your health, and let your portfolio work quietly in the background. How has your portfolio been performing so far this year? What's your go-to strategy for balancing growth and cash flow? Drop your thoughts in the comments below. I'd love to read them and learn. I haven't fully decided what my next video is going to be yet, but whether it's my Eastern Europe trip or more financial breakdown, make sure to hit that subscribe button and turn on notifications. Thanks for watching, and I'll see you in the next one.